Good afternoon. Good afternoon, everyone. Randy, good to see you. Randy, Turhan, Stephen, Hardin, good to see you. Roger, oh, he's got to be a friend of mine, right? Roger, good to see you. Love it. As you guys are coming in, go ahead and use the chat. Go ahead and say where you're from. I'd love to know where you're from. And also, if you have the ability to keep your camera on today. What I've always noticed was that anytime I show up to an event and I showed up in full and absolutely committed to that masterclass, that event, I knew I was going to walk away with a heck of a lot more. So I'd love if you could go ahead and throw on your camera, say hi, say where you're from, because we're going to dive in here in just a second. Trent, thanks for the participation from Southern Cali. Good to see you. I'm actually going to share with you some deals in Southern California, some pretty damn good ones in California. So you definitely want to stick around for that. What else we got? We got Steven, we got Hardin, Adler. Go ahead and throw your, go ahead and utilize the chat there. Say hi, tell us where you're from. I'm also just curious too, if you could go ahead and use the chat as well. Randy, always a good time to see you. I'd always be curious on what brought you here. What were you hoping to get out of today? And then we're going to go ahead and dive on in because there's no better time than the present. Go ahead and type in the chat, say hi, and also tell us what brought you here. And just so you guys got to lay the land too, we got Pete Gormley, who's one of our strategy experts in the room as well, who you may have been communicating with. He also will be an awesome resource for you as well. So feel free to always message him if you can't get a hold of me. So let's Trent says how to identify and approach motivated sellers. We're certainly going to cover that today, along with much more. So as people continue to roll on, let's go ahead and get started. Well, you may have heard that there are rising interest rates causing dramatic shifts in the real estate market right now. And these shifts right now, as you can imagine, are going to either make you very wealthy or can leave you sitting on the sidelines. So if you're interested in buying real estate right now or planning on making money in real estate in the fourth quarter of 2023 or 2024 or 2025, then you're going to certainly need a different strategy than traditional real estate. Because I want to share with you today how traditional real estate, going to banks and getting mortgages, is completely unsafe and the wrong way to go ahead and approach real estate today. Because today I want to share with you a much better way. A way that leaves you with little to no personal risk. And I'll tell you that this strategy is something that we developed many years ago. And I'm going to share with you why later on here, because we want to put you in the best position to utilize this strategy. Now, I learned this strategy from a mentor of mine, a partner, but somebody I also call my father-in-law. As you can imagine, that it's been quite the experience and a very good one. And he originally got caught in the traditional real estate trap, also known as 2008, and used this strategy in particular in order to get out of it. So I'll actually share with you more about that exact story and how he's able to utilize that in just a bit. This is a completely different strategy when it comes to acquiring real estate. And once I share with you how to acquire this real estate, I'm actually going to share with you our trademark 3 payday system. So that way, you know the best way to exit out of these real estate deals, which is going to create large lump sums for you, monthly cash flow, and also allow you to build wealth long-term with a cash flowing portfolio. Now, I really encourage you to go ahead and pay attention. Put your cameras on, because this is a completely different real estate strategy than you've ever heard of. See, because this is not wholesaling. This is not fix and flip. And this certainly is not sub-2 either, even though we do them, but it's a completely different strategy. Because in this master's class right now, you're going to want to know a very particular strategy. And that's because we are entering into a completely different time when it comes to economically, politically. And this strategy is going to put you in the best position to go ahead and create wealth during this time frame. There's even some recent articles that are popping up from all across major media right now that are telling you this exact strategy. See, the Wall Street Journal just recently said that buyers are getting their home loans from an unlikely source. And who was that? The seller of their home. Forbes mentions that there's a power to creative financing during this time of survival. Yahoo Finance is talking about how owner financing is helping combat skyrocketing interest rates. And even realtor.com is posting about how home buyers are utilizing owner financing in order to combat the higher interest rate. See, when I look at traditional real estate, and I know you're looking at a stick figure right now, but continue to follow with me. When you look at traditional real estate, if you are a buyer or an investor and you are interested in purchasing a property, you have to then go to a bank and put down a down payment, have your credit checked, your collateral, personal guarantees, and also have fees associated with these deals. So how we actually do it is we actually dive in and work directly with the homeowner, so that way we can completely eliminate banks. See, there's people utilizing this strategy inside our community all across the country consistently and creating profits over and over and over again, utilizing sellers to sell their property. So Tony, who's up in Bangor, Maine, he actually came across this property. Seller was relocating out of state, and he was able to provide a solution to create over $24,000 in profits. You have Link, who's down right outside of Charlotte, North Carolina, one of the hottest markets all across the country. And he helped solve a seller's challenge and was able to generate about $155,000 worth of profits from these exact strategies. So you had John, who is out of Denver, Colorado. And this is a property, a condo in a skyscraper. And he was still able to solve the seller's challenge by go ahead and utilizing these strategies in order to put them in the best position. And he can also create $88,000 worth of profit from this deal. And Roger down in Atlanta, Georgia, was able to help these sellers who relocated out of state, was able to structure a deal with them that put them in the strongest position. And he was able to generate $93,000 in total profits from this deal as well, utilizing that strategy. See, this is actually my wife and I, Kayla, when we first got involved in real estate investing and we're utilizing these strategies, we went ahead and were able to actually acquire our first home. See, we just were not in a position to go ahead and acquire real estate traditionally. Now, I'm going to share with you, it was actually a blessing in disguise, because when you look at the way this deal was structured, it actually was significantly more profitable and an easier entry because we utilized these techniques. See, if we went on the traditional market, this exact property was up for sale for $525,000. That means that it would have required me to put down at least 10%. In today's market, it probably would be 20%. And that means that the monthly payment on this property at the time, which actually seems relatively low right now, was 4.5%. Well, that would have been a $2,300 mortgage payment plus taxes and insurance. And the amount of money that would be paying down every single month was only going to be $622. Well, because I understood these strategies, me and my wife put down a little down payment, $5,000 in total on a $525,000 house. We walked directly into a payment that was significantly lower than the traditional market. And we were walking into significantly higher amount of pay down every single month as we were paying on another loan, which means that it put us in a very strong position to actually exit out of that property, even though we lived in it, in about 20 to 30 months, and ended up exiting with about $113,000 in profit from that deal. Plus we got to live in it. So just imagine if you could just utilize this strategy to take advantage of being a homeowner, as Forbes, as realtor.com mentioned as well. So let me tell you who this is for. This masterclass is for somebody that's interested interested in working professional. This is somebody that is interested in being a working professional, somebody that is currently has a W-2 position, but really wants to go ahead and make a lifestyle change and put themselves in a stronger position to go ahead and create a different lifestyle. We're consistently seeing this across the country where people are sick and tired of working at their W-2s and now want to go ahead and build a real estate portfolio that will change their life. This is also for those that are current real estate investors. You may be already in a different real estate niche and you want to go ahead and put this onto your current real estate business. I was just getting off the phone with a realtor earlier today who's out in the San Francisco area, and he said, hey, I'd like to learn how to do these strategies because I know that I'm missing out on deals. I was just recently speaking with a wholesaler. He has actually submitted multiple deals to me as for me to go ahead and purchase those properties because he wasn't able to go ahead and close on them. He didn't understand the strategy. Now I'm telling you, both of those properties, if they go through, will be worth 6 figures a piece. I'm going to share with you exactly what that strategy is well, and also somebody that's interested in creating more freedom. So let's talk about who this is not for. This is not for somebody looking for a get rich quick. This is not for someone who's not interested in taking action today. Because today we're really going to focus on how you can do your first deal and build a portfolio of cash flowing properties without dealing with banks, credit, ever getting a personal guarantee, or borrowing money from others. See, this strategy was originally created by a family member of mine, my father-in-law, Chris, because he was a broker owner for 18 years. He did fix and flips, he did raise roof projects. But as you can imagine, in 2008, everything came crashing down. We were literally sitting there at an event, and he was telling the story. And he said he turned and looked at me and said, I don't think I've ever told you this, but I was in 23 projects when 2008 hit. So he had personally guaranteed all of that debt. He had good credit previous to that. So who do you think the creditors were calling? They were calling him. Now, as he tried to unbury himself and get himself out of his current circumstance, he ended up diving into this exact strategy. While he was building that business, my brother-in-law, Nick, goes ahead and joins him. He was a realtor for 8 years. And when he joined him, he said that this was such a healthy environment because he was helping sellers. Now, I'm going to share with you why that actually is going to resonate when I talk about how we exit out of these deals. Now, myself, I was a bartender and personal trainer just a short 9 years ago, and I've been utilizing this strategy to not only exit out of bartending and personal training, but also buy my own property and build a portfolio in itself as well. Because look, you can absolutely do this because today you are not learning from a group of people or a mentor or somebody that did these types of deals 10 years ago. No, we are absolutely in the trenches right now, doing deals, talking to people, creating these types of transactions, and helping people all across the country continue to profit from them as well. So today is really about helping you bridge the gap and put you in a position where you can go ahead and start utilizing this strategy. So how do we actually buy then, right? We buy with no banks, we buy with no large down payments, and we buy with no credit or ever personal guaranteeing debt. As you can imagine, that was the techniques that we had to put into place coming out of the 2008 crash. Now, one of the ways in which we buy, and the way we're going to speak about today, even though we buy real estate with particularly 2 other strategies as well, is owner financing. So owner financing really means that when you buy a property, instead of going to a bank, the seller is going to finance you themselves. As you heard in the realtor.com post, it said that buyers were utilizing seller financing in order to combat high interest rates or to get better debt or better mortgages. So you as a real estate investor, of course, want to take advantage of that. And that's how I'm going to share with you some amazing case studies here as we continue to go through and share with you how real estate investors all across the country have been able to do that as well. It also brings the power back to you and not the banks. Because when you go purchase a property and you're utilizing the traditional techniques, who has all the power, or who has the ability to determine all of the terms of the agreement? That's the banks. Those are the banks. We want to get away from the banks and bring power back to you so you can start creating better and better real estate transactions. And also, we're about eliminating traditional investment barriers. Because how many times do you need, as a real estate investor, have to go find another 20% down to go put on a property? Or how many times do you have to go to a bank to ask for another mortgage? Or how many times you have to go and potentially borrow money from an investor or a family member or a friend to go ahead and build onto your portfolio? This is about eliminating those traditional barriers, because there are none when you go ahead and purchase with owner financing. So owner financing really just looks like this. You, as the real estate investor, are interested in purchasing a property. So you go ahead and you approach the seller and say, I'd like to buy this house. You create the terms of the agreement. The buyer goes ahead or the seller goes ahead and title transfers to you, meaning ownership transfers to you as the investor. Now you go ahead and you create an IOU or a mortgage with the seller. And now you're just going to pay the seller monthly payments until the property is cashed out. See, I shared with you a property earlier that was on that page. This was actually a home that I approached the seller, and he was actually relocating from Indiana, meaning this is a second home, and he was relocating back to Indiana, and they just went through a very challenging time with the family. There actually, I believe there's a death in the family. So when I approached this seller, he just simply wanted to walk away from this property. So we ended up creating some very good terms that work for both of us. He never had to see the property again, and we were able to get great profits on this deal for handling everything. It's about a $109,000 profit in just a short 48 months. There's a student of ours down in South Carolina. This is actually his first real estate transaction. He was able to solve this seller's challenge as they were moving to another home as well, and they just weren't able to get the price they wanted on the house. Well, he was able to generate $82,000 from this deal as well. And Zach out of Minnesota, this actually was a family member of his. So he was looking to help them and to be able to allow them to not become landlords. They were moving to another home, were unable to sell it. They weren't ready to be landlords. So he ended up creating this transaction with the seller, and it's generating $70,000 of profits throughout the course of the term. See, there's typically 1 to 3 steps when it comes to purchasing on owner financing. So first is finding the seller. I know I saw that in the chat earlier. Somebody said, well, I want to know how to find motivated sellers. I'm going to show you exactly where to find motivated sellers. Then once you find the sellers, now it's just about the communication and finding out the right terms of the deal. And I'll share with you what the exact terms you'll be discussing as well. And then also, then it's just about closing on the property. And I'm going to share with you how the transaction actually comes all the way to fruition when it comes to these owner financing deals. So first and foremost, how do you find these sellers? Well, there's 3 places that we tend to find them. Number 1 is expired listings. Expired, canceled, withdrawns, we'll all kind of lump those together. But at the end of the day, all it means is that the property was on the market at one point with a realtor, and for whatever reason, the property didn't sell. So then it expired off the market, and now we approach the seller. We have for sale by owners. There are many people out there right now who have a property that's on the market for sale by owner. And where are they? They're just listed on the website, or they have a sign in their yard. And then they wonder why it doesn't sell. Well, we go ahead and we approach them at the end of the day, and that's how we're able to solve their problem as well, because most people don't believe that there's that much work involved in selling your house as an owner. And then lastly, we get them from referrals. I can't tell you how big of a resource this is right now. Right now, half of the leads that are coming into our investment company are from realtor or wholesaler referrals. And that's just because most people either don't know how to or choose not to know how to do these types of techniques, including owner financing. And I'm telling you, 2 of the leads that I'm working with right now that are going to potentially close this month are worth 6 figures over the next 5 to 10 years. So here's an example of an expired property. So this property, we actually approached this seller. Originally, we actually called on this seller and they inherited a couple properties, and we were going to purchase this home from them originally. And they said, no, we're not interested at this time. We're just going to go ahead and sell traditionally. So then the property expired off the market. So we went ahead and they reached out to us, actually. They reached out to us and said, hey, I'm interested in this owner financing thing, but what you have to do is you got to come up here and purchase the property this weekend. So we went up there, structured the deal, got the paperwork signed, and went ahead and closed on this property. This property in itself was worth at least $123,000 in total profits at the end of that deal as well. This is a property that was out in California. This particular seller, so this is a for sale by owner. So this was a seller that was interested in selling on their own. When we approached the seller, this was actually a rental house for her. She lived out in the San Francisco Bay Area. And this property, she just got rid of a renter, and she was interested in selling it. So when our student went ahead and approached the seller, she was more than open to the concept of doing a creative deal. Now, this deal ended up lasting about 24 months and was about $67,000 in total profit on this deal. Now, there's this property in itself. I've actually never seen this house. Now, I think my business partner has. But this property is all the way out in the top left-hand corner of Connecticut. This was a realtor that we actually still work with today. This realtor had this property listed. This family was relocating because they're in the military down to Alabama. And he called us and said, hey, we're unable to get the number that they want on this deal. They may be willing to wait for their money. So are you interested in doing one of your creative techniques? So we, of course, I went ahead and actually spoke to him, structured the terms of the agreement over the phone. I went ahead and purchased the property within about 48 hours from that deal. That deal in total was about an $81,000 transaction. So when I look at the types of terms that are associated with these deals, it ends up coming to about 5 different things. And these come into every single one of the owner financing deals that we do. So really, when you're talking with a seller and you're looking to purchase the property, you're looking at what's the purchase price? Is there a down payment or not? Is there an interest rate or not? Is there an amortization, or meaning like how long of a time frame are we paying and what's the interest rate on it? And is there a balloon, meaning that your payment's going to be just due in a certain period of time? And then that breaks down to like, what is the actual monthly payment on the property? So what that looks like when you actually look at a normal deal is, we actually bought this property. It is on the water, as you can see, absolute gorgeous views. It was on the water down in southern Massachusetts. I approached the seller. The seller was interested in moving. She was interested in selling, but the problem was that her mother was older and she was sick and she didn't want to move right away. So we ended up structuring a very unique deal with this particular seller. Purchase price on the property was $945,000. Yes, you're seeing all of the right numbers here. Down payment on a $945,000 house, only $10,000. Only $10,000. Imagine if you could buy $1 million home today for $10,000 down. Monthly payment, principal only, $2,500, principal only payments with a 48-month balloon. I was actually just looking at properties online, properties that are $1 million or more. If you just use the same exact property, $945,000, if you went to go do this traditionally, I wonder if anybody would know this answer. If you went to go do this traditionally, what would the down payment roughly need to be on this house? And you go ahead and throw in the chat, like, what would the down payment roughly need to be on this house if you did it traditionally right now? Go ahead, type in the chat, and then we'll go and look at the chat in a second. So if you can imagine that it's a significantly more amount of money, and the monthly payment on that would be significantly higher, if you were simply just able to create this one transaction, I would guess that there would be a difference of hundreds of thousands of dollars that you would make in profits by simply structuring it through creative financing, through owner financing, than you would if you did traditionally as well. Now that we've kind of looked at what the terms would look like on a deal, then why would a seller sell, right? You're sitting there, you're like, I'm banging my head against the wall. I'm sitting there like, why would a seller take little to no money down? Why would a seller go ahead and give you a 0% interest rate? Why would a seller not want you to personally guarantee debt? Sounds a bit, different to me, right? And I warned you at the beginning, it's a completely different strategy, but it's all about solving problems. So let me tell you some examples of some ways in which we've solved their problems, and we still do today. And this isn't even counting what's happening in today's market. This is just over the past 10 years, we've been focused on this strategy. Look, most people or most sellers want to maximize their price, right? We have these massive amount of sellers right now that have unrealistic expectations. They're on the market, they're approaching their realtor, or they're selling it on for sale by owner, and they're saying, I want this price. And the market might have been that price 4 months ago, 6 months ago, 12 months ago. It's not at this point. That is why we are seeing so many pieces of real estate sit on the market. If you go on Zillow right now, go look at how many properties are currently past 30 days, past 60 days, past 90 days. Those are the opportunities we have. Why? Because the seller is sharing with us that they would rather have a higher price than sell it today. So they want to maximize their profits. Secondly, sellers are interested in cash flow, creating some cash flow. I shared with you a couple of the deals earlier. So there are some sellers like that example that we went and approached this seller, property expired, was up in Massachusetts, seller was relocating to South Carolina. That seller was more interested in having that property taken care of and also knowing that they were getting a monthly payment every single month, and they cared about actually just getting rid of the property. There are so many sellers that are in a position that would just rather cash flow their property. Or guess what? They're looking for estate or tax planning purposes. We purchased our office building. So yes, this is good for office buildings. Yes, this is good for multifamily. Heck, this is good for cars. This is good for boats, you name it. Owner financing is a great opportunity. So when we approached this seller actually had a sign in the yard. In the office, it's a mixed-use building, offices up top, small business on the bottom. He literally had a sign that said, willing to owner financing or wants owner financing. And why did he want that? He wanted that because he was interested in his estate and tax planning purposes, because he didn't want to take care of the property anymore. He knew he was getting sick, and he wanted his trust to receive monthly payments. So what we ended up doing is we purchased the property. We structured a very good real estate transaction for both sides. Like very small down payment in comparison, very good interest rate in comparison to the traditional market. And his family was extremely happy. He ended up passing away, and we still to this day are making monthly payments to him and his family. Everybody's happy. Because at the end of the day, this is about solving people's problems. We don't sell, we provide solutions. Because if you're unable to solve a seller's challenge with owner financing, then you're not going to have a deal. And I'm going to continue to share with you our exit strategy and also some amazing portfolios as we continue to go through here. Because at the end of the day, you don't have to do many deals per year in order to dramatically increase your personal wealth or increase your cash flow or increase your current monthly income. Especially because we're going to consistently share with you how you're going to be able to be in a risk-averse position right now, especially with a dramatic change in the market, be in a risk-averse position right now with maximum amount of profit because you're able to solve so many different problems right now. So let's talk about how we exit. All right, let's talk about how we exit. And before we do that, I want to take a quick pause here. I'd love you to just go ahead and type in the chat and just tell me what was the biggest takeaway so far from acquisition before we talk about disposition. Maybe just, even if it's one word, just tell us, just so I'm getting some feedback here. Tell me exactly what was a takeaway for you? How to structure the deal? Yeah, okay. You had some questions on how does it work for a small multifamily? Oh, we purchased a property, a 4-unit, and then I'll keep rolling. We purchased a 4 and a 6 unit. Every time we went, and what we did is we would send what we would consider a mailer. So just know that a strategy to acquire leads or to talk to sellers is through mailing. Now, we approached 2 sellers. One of the sellers inherited the property, 6-unit building, was able to go ahead and we're able to go ahead and allow him to not have to manage the property. And when we structured that deal, we ended up taking over the property, increasing the rents, all principal only payments, and we're able to convert that into about $116,000 in about 30 months, meaning we got income from it, and then eventually we sold it off. You could have certainly kept it. There was another property. There was a seller. He was a teacher, 4-unit building. He was a teacher. He just didn't want to maintain the property anymore. He was unable to now. So he didn't want to maintain the property, but was really hoping for it as a retirement. So we went ahead and structured seller financing with him. We're making monthly payments to him, and then went ahead and paid off a balloon in just under 48 months as well. So great opportunity there for you as well. So, but we're not going to talk about holding on to rentals today. Certainly, I mean, we're helping students all across the country focus on and be able to utilize that type of transaction. But today we're going to focus on rent to own. Now, the reason why we're going to focus on rent to own is because it ties into our trademark 3 payday system, which we're going to hit in just a minute as well. So now that you have the ability to acquire real estate without large down payments, without going to banks, without personally guaranteeing debt, without ever borrowing from friends and family and needing to raise capital, we now are going to exit via rent to own. Now, what is rent to own? So rent to own is really just a program to help tenants or people that cannot qualify for loans become mortgage ready. It's simply a bridge from unbankable to bankable. Now, that bridge is a simple formula for you to go ahead and put it to use. And that formula is what's going to start generating these large down payments, these large or this wealth built into deals and the passive cash flow on these homes. So let me bring back my son's 5-year-old drawings, right? So what is rent to own? So rent to own is so now you as the investor, you actually have the property, you own it, right? You bought it on seller finance, you own this property. Now, what you're going to do is you own this property, you're going to go ahead and sell this to a buyer that needs time to qualify for loan. What you're going to get in return from this buyer is this buyer now has an option to purchase the property for a certain period of time. He's also going to he or she's going to give you a higher purchase price, a premium on the purchase price. They're going to give you a nice down payment on the house, and is going to be giving you monthly payments on the property as well, which then gives the buyer access to the home. Now they can live in it and be treated like a homeowner while they're working on building their credit. So there's just some simple steps to walk through in order to get this rent to own done. Number one is now you have properties, you got to find buyers. I'll share with you where we find our buyers. Then you got to create the terms of the agreement because you bought it a certain way. Now you're going to sell it. Now we got to determine the terms of that agreement. And I'll talk with you about what those terms are. Then we're going to go and we're going to close on the property. Once you now have all the terms, now you're going to go and do what we would call a formal lease signing or a closing on the property. See, Jose out of West Virginia, this was actually his first deal. His first deal was $85,000 in profits. He was down in West Virginia. He put this property on agreement. He purchased it and then went ahead and found rent-to-own buyers. This is out in a rural area. These rent-to-own buyers just were unable to come up with a large enough down payment in order to qualify for traditional loans. We got Adam out in Wisconsin. He was able to put this property under agreement, go ahead and purchase this property. Again, right now, there are so many buyers that are being tossed aside right now. So many buyers are being tossed aside because they could qualify for loans 12 months ago, 18 months ago, when interest rates were at 2-3%. now that they're at 6, sometimes as high as 7.5%, based on their credit and their down payment, these buyers are no longer able to qualify for a loan. This is the exact buyers that we're placing into properties day in and day out. This is down in Florida, right outside of Fort Lauderdale. The seller was on the market for many months. He was unable to get his price. So what we end up doing is coming in and structuring a deal as well. And now these buyers, of course, once you have a property that is in a desirable area, becomes very easy to go ahead and help in order to go ahead and place these buyers. Because when we look at buyers across the nation, you have buyers, it's typically 6 to 8 buyers out of every 10 that walk into a bank can't qualify for a loan. Imagine that. 60 to 80% of the market who would like to buy a home cannot qualify for a home. Once you're able to go ahead and get these properties, purchase these properties on creative financing, finding these buyers is not difficult. It's now about sifting and sorting in order to find the right buyer and to find the best buyer. So that way you can help them get to the finish line and make sure that you're continuing the trends that we have, such as qualifying and getting buyers to the finish line 80 to 90% of the time across the board, and trying to eliminate as many challenging defaults as possible. So let's dive into how we actually find these buyers then. So online marketing. I mean, we just put out blaringly obvious marketing that says we have a house for sale, willing to do rent to own with large down payments. Local signs. When we purchased when Chris, my father-in-law, purchased his first house with creative financing, this buyer drove by the house every single day when it had a realtor sign in it. Every single day that had a realtor sign in it, but didn't call because he knew that he couldn't qualify for a loan. Yeah, he was a Mason. Immediately, when Chris put that sign in the yard, that house sold within 7 days. It was a $20,000 deposit. Within 7 days. And referrals. Of course, realtors right now are certainly giving us referrals of buyers that they're just unable to get to the finish line right now. So now that is a great opportunity to go ahead and work with buyers. This property is in Tiverton, Rhode Island. Amazing house. We bought this property, we've owned it now for many years. This particular buyer owns multiple businesses. She didn't want to go ahead and qualify for a loan. She never wanted to. So when she approached us, she said, I'd like to put as much money down, and I'd like to structure over time the ability to put more and more money down so I can basically have a cash sale on the property. This property isn't even done yet. That's why I said it's $20,000 plus you're self-employed. So this particular buyer, so that's over $200,000 in total profits that will be collected once this thing's done. We already have over $100,000 in a down payment. These particular buyers, this is a great house. This is an attorney. I'm sorry, she wasn't an attorney. She was a nurse. This particular seller was a nurse. I approached her. She tried to sell the property multiple times. This is in a relatively rural area in Connecticut. Trying to sell the property multiple times. I remember literally sitting on that deck right there, having a conversation with her and her sister, her and her daughter, and explained to them how we buy. We ended up structuring a great deal with them. It was a unique property internally. So when we found these buyers were they had a unique business. They went to flea markets and basically took in antiques and sold them. So they were never going to be able to get bankable right then. So, but we knew they were self-employed. We knew exactly how to get them to the finish line. Total profits on here are about $64,000. This is one of our great deals, which is down in the Cape. We've owned this property for like 9 years now. It's an amazing property. The sellers that we bought from are going through a divorce. This particular buyer she was going through law school. and she was in a lot of debt, so she was unable to go qualify for a loan at the time. She put down about $35,000 up front. This total profits and beyond are over $123,000 right now on this deal. So let's talk about the terms of like what rent to own is. So when we look at these deals, there's a couple things that come into play. So if I'm going to sell a property to a buyer, I'm going to sell it at a higher purchase price. I'm going to get a nice large down payment on the property. We're going to have rent payment every single month. And then there's going to be the length of the term, or how long the buyer has until they are able to exercise their option, or really like how long of a time frame until they exercise their option. And if they are unable to do it in the meantime, then of course we would still own the property. So when I look at the terms of the deal, I just want to show you a breakdown on this, because if we look at it in terms of this particular deal, which was an amazing deal with a student of ours, Rick, up in Nashua, he bought this house. So this house, brand new construction. Imagine that, brand new construction. Why would they sell to us brand new construction? Well, it happened to be right next to a trailer park. So if you're out the back window, they're looking at a trailer park. Do our buyers care? Absolutely not. But does the traditional buyer care? They do. And they certainly did, because when we went ahead, we bought this house for, I forget exactly what we bought. I think we bought for like $600,000 or $575,000, but we ended up selling this to a buyer who owned a paving company. Young couple, I think they're like 22 or 23, and they had large lumps of money. So what they ended up doing is, in order for us to structure the deal, we ended up getting about $125,000 up front on a $625,000 house. We sold at a higher price. We had a nice large down payment. Monthly payment on this is about $3,100 with bricks creating cash flow on it. And now, it's a 60-month term when this property needs to be cashed out. This is a deal that was done out in, it was Western Pennsylvania. One of our coaches, Mallory, she's over there. This particular property, we purchased from sellers that were moving out of state, and they wanted to move out pretty quickly. They're actually already gone. And we end up working with these particular buyers. These buyers are exactly like the consistent buyers that we've been talking about here today. Needed credit enhancement, and also needed time in order to increase a higher down payment so they can go get a bank loan. This deal in total is about $97,000 on this deal. This property, another great property out in California. I know I saw somebody asking about Southern California. This is another great property out in Southern California. These particular buyers, amazing couple, young couple, and just really need time. That's all I needed was in order to get this thing to the finish line. Mike ended up structuring this deal. It's about $74,000, all 3 paydays, which we'll talk about here in a second. We're almost at the 3 paydays. I'm going to share with you how this all comes together here in just a moment. So who are your buyers? Your buyers are someone self-employed, needs legitimate hiccup in their credit, or they had a legitimate job change. And they need you for a couple of reasons. They need time for seasoning, time for getting their credit together. And also they need to increase their down payment. So now that we've sold this thing on rent-to-own, I want to share with you now how you can start creating these 3 paydays, because the market right now needs you as a real estate investor. They need high quality real estate investors that can solve problems today. And there are more and more challenges today in the traditional market than there has been in a very long period of time. So much so that even mainstream media is calling for these types of transactions in order to help the traditional market. I was just on a phone call recently with a real estate agent that's been an agent for about 20 years now. And he says, my outlook on what I'm doing right now has to dramatically change because things are going to be very different very soon. So let's talk about how this transaction kind of all comes together and how you start profiting from it. So I brought you back to the 5-year-old drawing. So looking at the left-hand side, the seller owns a property. The seller goes ahead and sells this property to you, the real estate investor. In exchange for that property, you're going to go ahead and you're going to put together an agreement. and you're going to take ownership of the house, and the seller is going to have a mortgage. So this agreement between you and the seller, for the 5 terms, if you can remember, we're going to include the purchase price, the monthly payment, and a due date. Now that you are the owner of this property and hold title, you now have the ability to go sell this property to a rent-to-own buyer. Now, when you sell this property to the rent-to-own buyer, this rent-to-own buyer is going to now have an agreement with you. As you continue to hold title, you're still going to be the owner, has an agreement with you for rent-to-own. They're going to come to the table. You're going to sell for a higher purchase price, a down payment, and some cash flow. Now, what that actually looks like in terms of your profits is our trademark 3 payday system. So now that I've shared with you how the transaction comes together, let's see how you get paid. So your payday 1 is going to be your deposit, your large lump sum. It's going to be, so if you sell this property for a certain price, you're going to take in a percentage. Typically, it's 3 to 10% of the purchase price that you sold to the buyer. So that's your large down payment. That's how you pull some of your equity and your profits off the table day 1. This is why it's extremely risk averse and also very profitable, especially when it comes to somebody interested in absolutely changing their lifestyle, changing jobs, becoming self-employed, or even adding this to your current real estate portfolio, because you're able to create large lump sums month in and month out. Now your payday 2 is the cash flow that you're receiving every single month. This is the residual. This is the passive part of your creative financing deals. And then your payday 3 is the equity in the deal. So it's at some point in time, this property will eventually cash out. Now this cash out will go ahead and be your lump sum and come directly into your pocket. So that's what your payday, that's what the 3 paydays look like. Let me just share with you exactly what our family business has looked like for the past 10 years. Again, these numbers are going to vary based on yours, but let me share with you what that looks like. So our average non-refundable deposit is about $26,961. Imagine that. Imagine what an extra $27,000 a year, a quarter, a month could do for you and your family. It certainly did a lot for me. Payday 2, it's $300, $308 per month per property. That's our average cash flow on these deals. I was having a conversation with a real estate investor friend of mine. He owns 300 units out in Iowa. His average cash flow on his units are $100. Now, they had to raise millions of dollars in order to acquire those 300 units. I'm telling you, you can step into day 1 into a property that is triple the amount of those 100 units in cash flow without having the risk of borrowing all of that money in order to get that deal done. Then your payday 3 is, or ours is $35,780. So this is when things get really fun. When I was having a conversation with my father-in-law, Chris, and he said, I knew this was the strategy I wanted to use when I looked at my spreadsheet of all the deals I had, and I could actively start seeing, oh, here's when I'm going to receive this lump sum, and here's when I'm going to receive this lump sum. So he could start predicting what his future was going to look like by knowing when the profits were going to come in when these deals cashed out. So that's about $75,000, all 3 paydays on these deals. I would love to just see some activity in the chat and just tell me, like, what could these 3 paydays do for you in your life? I can tell you, when I was a bartender and personal training, if I saw this, I would have been absolutely blown away. And the reason is because I was making $25,000 a year as a bartender. So I'd love for you to go ahead and type in the chat, like, what could an additional, like, one deal, just one of these deals, $75,000 do for you this year, this quarter? Love it. Changed my life, says Randy. Surely did for me. Love it. Freedom. Very good. Let's look at what an actual deal looks like then, as it breaks down. So this is Rick out of New Hampshire. Rick went ahead and he purchased this property. These sellers, he actually originally approached this seller. They were doing a rehab on this house, and they were trying to relocate out of the state of Mass. This is actually a deal in Massachusetts, out of Massachusetts. So when Rick approached them, they weren't ready to sell, but then they ended up calling him back about 6 months later, and Rick ended up getting a much better deal. He went and bought this property on owner finance, ended up buying this property for $276,000, $1,200 principal only payment. That's 0% interest on this property. He had a 48-month balloon. Went ahead and sold this to buyers. These buyers sold their house in Georgia. They were trying to come back to see family in Massachusetts. They said to Rick, they're like, "Can you please hold on to that property for me? I want to go ahead and fly up and see this house. We're in this whole transition." Rick said, "That's fine. Come up. If you just have to make an offer if you get up here." He went ahead and sold this property for $299, monthly payment of $1,500 a month. Term on this was about 48 months. So all in all, his 3 pays look like this on this deal: $36,000 for his payday 1. Small monthly cash flow throughout the 48 months, only $2,200. But his payday 2, as he built in equity in this deal over time, total profits on this $84,000 deal on a property that he just ended up acquiring from someone that couldn't flip it. Another great opportunity there as well. This is Brian out of Illinois. This property ended up acquiring from a seller. This seller was moving into another home. I believe they were upgrading to a new home, was unable to get the price that they wanted. This thing sat on the market for 6 months. And of course, Brian was communicating throughout the process. So he ended up purchasing this property for $214, a month payment on this for $1,312. And the term on this deal was 120 months. So balloon in 120 months. Buyer, $260,000. Monthly payment was $2,057. Getting 10-month term. Small down payment, or a good down payment, but smaller, $28,000. But look at this cash flow, $89,000 in cash flow through the course of the 120 months. $89,000 from a deal that he didn't personally guarantee. He didn't put a down payment on. Didn't have to go to a bank. This is all about solving problems right here. It's a $166,000 deal over the course of the 10 years as well. This is Russell. Talk about California. How many times do we always get asked that? California, does it work here? Russell, great opportunity. So Russell is he was a gym teacher. I know he calls it something completely different, but he was a gym teacher and a basketball coach for a local high school in San Diego County. He ends up joining us and does a couple deals here, finds this deal, buys this property for $750,000. Monthly payment on this is $4,000, so it's a high payment. He gets a 48-month term. Rick goes ahead and sells this property for $775,900 with a monthly payment of $4,000, so no cash flow on this deal. But he's got a 48-month term. Now, these buyers come in with $100,000 down on this property and another $100,000 within 12 months. $200,000 all up front for his payday 1. These buyers, one of the buyers, I believe, is a truck driver. And the other one, I believe, is an entrepreneur as well, the husband and wife. So they needed time in order to qualify for the loan. No cash flow, and his payday 3 was negative, right? Because he received all of his profits up front. But heck, I would love to receive all my profits up front as well. So this is about a $135,000 deal on this. So I'm showing you individual deals, but let's look at what like a portfolio looks like, right? And this is what your portfolio could potentially look like. So what I'm sharing with you is 12 months, 20 deals. So you may be looking at this and saying, all right, that's a little ambitious for me. I don't really care about doing 20 deals. Okay, we'll cut it in half. And then you also may be looking at this and say, like, I want to do 40 deals this year. So just imagine how it's going to continue to expand, because this is about bringing more and more deals together. So full disclosure, this wasn't our first 20 deals, and it probably won't be yours, but this is what it looked like. payday one was $593,000 in cash flow. That was all upfront, non-refundable deposits. Payday two is $6,500 in monthly cash flow. So that is per month, each month, right? Then payday three is $822,000 in profits that will be realized over the next anywhere from 3 to 10 years. So it was a $1.6 million in profits created and now will be realized over the course of the terms of these deals. This portfolio can absolutely be yours if you continue to stick with the system and work at utilizing this strategy. I want to share with you just some of the students' portfolios as well, so you continue to look at different students in different markets. So this is Mike out of Fresno, California. His payday one is $18,000 up front, $300 a month per property per month. And this is $40,000 on the back end. He's actually cashed out some of these properties. So just under $500,000 in paydays created and realized. This is Rick. He's out of New Hampshire. $43,000 in non-refundable deposits up front, $388,000 per month, and $45,000 in profits on the back end. Rick's done 4 deals, averaging $109,000 per deal. Rick actually, Rick was in government contracting. But he was interested in retiring, and what he saw in his bank account was not what he was hoping to retire for. And he wanted to maintain his lifestyle. And he was not going to be able to do so unless he made a dramatic change in his approach. And that's why he started utilizing seller financing in a rent-to-own 3 payday system in order to get so. So I know you've been asking yourself, and that is like, will this actually work in my market? We see this consistently. It doesn't matter what the price range is, what the market conditions are, and what the area is. We have students in 80 plus markets right now doing deals. Now, each market is going to determine what the end of purchase prices may be, or the actual profits on the deals may be. But in each market, seller financing is certainly a great opportunity to go ahead and get deals done. There's not a single market out there that I know of that doesn't allow seller financing. Even markets that are strict on other types of deals, like Texas, certainly are open arms with seller financing. So can this really work? It absolutely can really work as long as you're committed to the process. As I said, people that are interested in taking action. Will sellers actually do this? Sellers are consistently doing this and are looking to do this now. And as you saw on those articles, sellers are willing to do it now. More and more willing to do it consistently. Yes, and of course, it's legal. We are always closing all of our deals with attorneys or title companies. Yes, it's always going to be legal as well. And does this actually require experience? It absolutely doesn't. I was a bartender and personal trainer. As I said, I had 0 real estate experience when I started. It's about 96% of our students that see success don't have real estate experience. It's all about continuously working our system and putting in the work. See, Brian was out of Chicago. I mentioned him earlier. Brian was he was an elevator salesman, and I feel like I always have to make a joke now. He was an elevator salesman, and he did have his ups and downs, but he did have a really good elevator pitch. I just hear everybody laughing. So he was traveling 3 days every other week. And he did that for 17 years, going to remote locations, selling giant elevators to mines and things like that. Now, he made really good money. Now, he'll tell you that. He did very well. But every time he came home, his son was getting bigger, and he was missing out on his son's life. And that crushed him. So when he came to us, he was interested in building a portfolio to help him exit his job. Now, he was able to do that in 9 months. He originally wanted to do it in 17. He was able to do it in 9. Now, Brian's portfolio looks like this. He's done over $1 million or created over $1 million in paydays, averaging about 80,000. Link's down out of Charlotte, North Carolina. When Link approached us, he was actually going through some troubling times with his family. And he was not only looking for a business, but he was looking for a community to be a part of to help support him through that transition. Now, Link has definitely seen some massive success inside our community and has done many, many deals. I think it's approaching 30 deals now. But let's look at what his portfolio looks like. So 20,000 up front, 317 per month, $39,000. Well, he's made over $1 million. He was actually one of the first people to make over $1 million in our community. So if you want to participate and you want to do deals just like people like Link and Brian and Rick and Mallory and Adam, everyone that I've shown you, be a part of those 80 plus markets all across the country and put this strategy to work to start creating a portfolio that can produce you 3 paydays per deal. I encourage you to go ahead and join us. Put in your application. It's a QR code right there. It's smartrealestatecoach.com/now. That's smartrealestatecoach.com/now. Throw in your application. We help people at all different levels and all different positions. What we do is we really create a plan in order to get you where you currently are to where you want to be. By simply putting in the application, we can then have an in-depth conversation with you to share with you exactly how you can go ahead and get to the finish line and help your goals right now and help support the market right now, to take advantage of the market right now. I actually had a really good conversation with probably somebody that you guys have seen before. He's in a position just like myself. He runs a big fix and flip company. And he said to me, he said, Zach, you're in creative financing right now. Everybody needs to be in creative financing. He said, when I talk with people that are in creative financing, I tell them, I say, you are in the right place at the right time. You are not going to miss a wave. This is a wave right now that you can 100% take advantage of. So if that is true, if that's the case, if we have a proven system that can get you there, what would be holding you back, right? You believe that you don't have enough time. I was speaking about Brian. Brian was traveling and built this company inside a Delta Lounge. Consistent. We have almost every single person in our community either has another business or is a W-2 employee, and they're building this around their current lifestyle. Do we, if you don't have enough knowledge, well, we can certainly help increase that knowledge and really get in the trenches with you, lock arms with you, and do deals with you. And that brings it to support. Always going to have a massive amount of support consistently. And that's really what brings us to this community here. So I'm just going to share with you one thing as I continue to roll through here, and that is this wicked smart community that is doing deals all across the country is certainly be here to support you as well. As I was stating, Link came in because he was very interested in joining our community as well and putting himself in a strong position to go ahead and do real estate deals. So let me just give you some behind the scenes here for a quick second. So it's our community. We got Frances here. She's actually out of Long Island. She's a chef, a personal chef. When I talked to her originally before she joined the community, she said, Zach, I don't have enough time to do this. During my peak season, I work 7 days a week. As you can see her right now, she's on the appointment right now in Long Island, structuring one of our lease purchase deals. Yeah, Greg, when I originally spoke with him, he said, look, I got a family of 5. Like, I don't know how I'm going to fit this in and to make this a part of my daily life. Look at it, you see him now. He's on an appointment now trying to structure one of these deals. Mallory, when I spoke with her, she said, look, I am a professor at Penn State. I got a law degree. I have all these accolades, but my challenge is how the heck am I going to actually buy real estate in a rural market like Penn State, which is also a very hot market, which I didn't realize until I went out there and spoke with their students. And then how am I going to do that so that way I can help support my young daughter? You got Jessica, who's down in down Chattanooga. She just had her first kid. How was she able to do so? She's able to do so because she started a real estate business. And the list just goes on and on and on across the board. So I'd encourage you, if you're really dedicated and committed to building a real estate business, there is no better time to go ahead and start a creative financing business. There's literally no better time to start a creative financing business and doing it with seller financing because the market needs it, the sellers need it, and certainly the buyers need it as well. Look, the train is leaving. I said you are in the perfect opportunity at the right time, and it is your time now. And I certainly look forward to seeing your success as well. So go ahead and join us. Do deals with us. Go ahead and put your application in smartrealestatecoach.com/now. You can also use the QR code. Like, I know it's a big decision. As always, I'm here to be a support for you. If you have questions, go ahead and type them in the chat, or if you want to open up your mic, you can certainly ask those as well. And we're here to support you. I'll stick around here for the next couple of minutes.
Hey, Zach, I put 2 questions in there. Can you answer those?
Yeah, let me hit them. Randy, what are the tax implications with seller financing? Is it the same as traditional purchase and sale? So I'm not a tax advisor, right? So it's also going to be structured upon the deals. But do you mean from a seller or from your perspective?
Like, I mean, because a lot of them are like rent to own on a balloon.
Yeah.
Like, I mean, and I know capital gains come into play too.
Sure.
But it seems like obviously your down payment money that you're receiving and everything, like that's going on a HUD when you close, right?
Yeah.
So, I mean, you have to report all that as earned income, right?
Well, I mean, it's still an investment, right? And
Right.
some of these will be long-term investments, right? And some are going to be short-term. But you're also going to get tax benefits like depreciation on this property as well as you're the owner.
Right.
You also be able to access owner draws and things like that. But we can certainly help you with that, Randy, once you come in.
Got it.
If you eventually
the
sell a portfolio, how do you build your portfolio? So good question. This is always like a number one thing that people ask. They're like, all right, well, if people are buying, or buying you out every 3 to 5 years, how do you build your portfolio? Well, there's a couple of different strategies, and certainly some we can help you with. So Randy, my suggestion is always do a bunch of rent to own deals first. Get enough non-refundable deposits and cash flow to support your lifestyle, right? Then let's talk about long-term strategy, because then as you build out your portfolio, you can start looking at, all right, do I hold some of these properties on a long-term rental? Could you Airbnb them? Sure. Do you want to look at multifamilies as well, or commercial properties? We'll do that in a long-term strategy. You continue to build up your portfolio. The challenge isn't the exit, right? It's let's get you purchased right. Let's get you acquiring them right. Then you can do whatever you want with them on the back end, especially as you start to look at a long-term strategy. Make sense?
Cool. And are you guys doing any assistance?
Sorry, I'm losing you, Randy.
For long-term assisted living?
That's not what we specialize in. But if you own it and there's a need, I mean, it's an opportunity, then you can always look at it. Again, you own it, right? That's the whole point. You bought it, sells your bank. You never have to go to a bank. You never have to personally guarantee the debt. You own it, though. So you do whatever you want with it. Awesome. Randy, thanks always for participating.
Thank you.
All right. Well, I'm certainly looking forward to spend some more time with you guys here in the near future. Our team will certainly be here to support you, and definitely wish each and every one of you the best. I'm telling you, this is a massive opportunity. We are consistently working on deals. Me, myself, I can just tell you, I was working on multiple deals in a very short period of time right now, just because of the opportunities right now in the market. I haven't seen this many opportunities this fast since I've been in it for 9 years. It's just, and I could tell you, my father-in-law would probably tell you the exact same thing. He hasn't seen this many opportunities, this need for creative financing in this long a time. Sellers are literally looking for it, need it, want it, and you could be a solution for them. and certainly make a heck of a lot of money doing it. It's been an absolute pleasure, everyone. You guys have an awesome rest of your day, and we'll speak to you soon. Bye, everyone.